Well, let's take a little segue out of that motion now and take a look at the markets very quickly. We kick things off out in the Far East, where Asia's share market rally paused this morning. Bonds rose and trade-exposed currencies fell as a sharp rise in new coronavirus deaths and infections dented hopes that its spread was slowing. Over 14,000 new infections is the supposed word. China's Hubei province, where the virus is believed to have originated, reported 242 new deaths, double the previous day's toll. And as I said there, 14,840 new cases just on February the 12th alone. Even before the rise in cases, economists were already turning more bearish on the likely hit to China's growth as factories idle and supply chains are upended. Citibank on Wednesday again downgraded its 2020 GDP growth forecast for China to 5.3%. The bank had forecast that it would be 5.8% in its January outlook before cutting it to around 5.5% around 2 weeks ago. Morgan Stanley, well, they believe that a gradual rather than a sharp recovery is the most likely scenario for the Chinese economy. It was all red, though, across the Asian border. The Nikkei in Japan inching 0.1% lower. That's sitting at 23,827 points there. So a big fall over the last week or so. The Hang Seng in Hong Kong more than 0.5% weaker as well. That's sitting there at 27,672 points. 2,906 points for the Shanghai Composite in China, which lost 0.7% at the close of trade. Let's head on over to the United States now, where all three major U.S. stock indices notched record closing highs last night again, as news that the coronavirus could be running out of steam lifted investors' optimism. Of course, that was based on data from the previous day. Based on the latest available data, though, the Dow Jones Industrial rose almost 1%, 29,550. The S&P 500, 2/3%, 3,379, while the Nasdaq Composite is nearly 1% higher at 9,725. Let's get a shift now and move our attention over, of course, to the European market and how things have fared there. Well, the FTSE 100 sitting in red territory, so a lot of red as well, with the boards getting that shock, of course, from the Chinese market, seeing themselves wonder whether the coronavirus will indeed be contained or whether it will be as it currently stands. 14,840 new cases is certainly a shock to the system. Is there any form of containment in the market? Are the data stats then from the Chinese to be believed as well, is perhaps the question. So all red across the board thus far when it comes to the European market. On the local front, well, a slight decline as well locally, around 1/3% down for the JSE All Share as well. Hopefully we'll get into that segment. 57,662 points there. So a marginal loss from a local market, having seen a more than 1% gain yesterday. It isn't a good day as well for the industrials, which of course have been impacted by things out in China. That does affect the likes of Naspers, which have a share in Tencent, which is listed in that Asian market. The financials, however, also sitting in red. Over onto the resource share front, well, this becomes the play that investors go into as they head out of the equity space. They'd rather go into the resources, which seem to have perhaps a little bit more potential. We are seeing when it comes to the gold index, though, the likes of Anglo Gold Ashanti having left South Africa's shores with that near 40 billion rand sale then of their assets, including Mponeng mine, of course, then affecting just how things look in South Africa's gold sector. Harmony Gold looking to scoop up that one. DRD Gold, who's specialized a lot then in delivering out of the tailings of gold mines, is now set to focus on platinum and PGM. So that's going to impact how their business runs as well. Just below 70 points for the platinum index. Over to the actual resources themselves. Well, gold seemingly doing fairly well this morning. $1,574 a fine ounce into the afternoon trade. $963 for platinum, with the price of Brent crude just going lower. That coronavirus issue certainly impacting it quite substantially there. Over onto the currencies then, well, the local currency has really hovered around 1480 odd against the US dollar, but there's been a biggish weakness over the last 24 hours or so for the local currency, now at 1489 against the US dollar. It's 1933 for a pound, with the euro setting you back around 16 rand and 20 cents. And over to the BRICS currencies, well, still a little bit of green as well. They're remaining as we, of course, await more news on that coronavirus, which will be quite interesting to see how the market reacts to all of that data. Let's chat to Viv Govender then from Rand Swiss. He joins us live from the Johannesburg Stock Exchange as we unpack this data a little bit more. Viv, thank you so much for the time. It was earlier just a marginal loss for the JSE All Share. It's turned slightly positive at this point in time. What do you see as moving the markets right now?
I think to some extent we are being helped by the gold, of course. The gold price being a little stronger, the rand being a bit weaker is helping some stocks obviously buck the international trends. But I do think that overall we are seeing a global nervousness around the coronavirus. Like you mentioned, that 14,000 plus jump up was dramatic. Until that point, most of the new cases per day were around about the 3,000 level. And then what we found out was the reason that it was about 3,000 each day was because that was the limit of the number of tests they could do in a day. And now they're using new tests to basically determine whether someone has the virus or not. And that's increased the actual sample size, also the actual infected number to probably what's more realistic. And another worrying factor, of course, is that higher number of deaths coming through, and the fact that we are seeing more and more cases outside of China as well. That's obviously very troublesome.
Yeah, that would certainly hurt even growth statistics out in that nation. But as you said, we are helped quite a bit by the commodity sector and them doing well on that front. Speaking of commodities locally, AngloGold Ashanti yesterday making that, I suppose, expected announcement of departing South Africa. But you then also have the likes of DRD Gold saying, well, look, we see a whole lot more in the local market and perhaps into the PGM space. Diversification, clearly the key here.
Yes, to a certain extent, but also I think it does indicate the weakness of the local, mining sector. I mean, the fact that you're going to tailings as opposed to new mines may seem to be a case where you might be looking at a little less, infrastructure building and a little less investment. The fact that AngloGold is looking to basically get out of South Africa in terms of mining is obviously a negative as well. It does indicate that there's a bit of, despite what some of these CEOs are saying, there's a bit less optimism about the South African mining sector at the moment than we would hope.
Do you see, though, perhaps some sort of gain for Harmony as they take up those AngloGold Ashanti assets, particularly that Mponeng mine, which has, hurt them quite a bit?
Yeah, look, I mean, in one way, it's great to have a mine that's the deepest mine in the world. But on the other hand, it is obviously a bad thing to have. You prefer to have all your minerals on the surface because it's much easier to, access. The fact that you go down 4 Ks underground is obviously it's a huge achievement, but it's not a great thing for a mine to be. Maybe the amount of money put in here could allow them to exploit the ore bodies a bit better, to give a bit more, running room into these mines for a few more years. But like I said, I do think that this indicates that, we are seeing a bit of a declining sector around the mining sector at the moment.
All right, let's head on over to MTN. 30 to 50% uptick in earnings expected there. Look, we've always said that the business is a good one. It's just unfortunately the territories, and this is proving the case as well.
Yeah, I mean, we all know about the disaster that MTN had with regards to regulation from Nigeria, where at one point in time we were talking about multiple $billion, fines being pushed through, and now it's come down, reduced significantly, and hopefully the last bit of that, uneasiness with the government is over with. It was a number of different issues that the government had, including things like, for instance, not, closing down SIM cards that weren't properly recard, offshore transfers, repatriation of funds, etc. Those things I think hopefully have been sorted out, and the underlying business still looks reasonably strong. In some parts of the world we are seeing cell phone technology, telecoms companies to a certain extent almost become commodities. And one of the good things about MTN operating in some of the markets it operates in, it still has opportunity for growth in those markets, which obviously has come through in the bottom line.
All right, well, certainly interesting on that front. We'll continue to check it in because I think the CEO really is doing some interesting work and would like to perhaps pick that one up quite substantially. Job losses, though, Viv, that has been major. And just this morning, getting word then that Damlin, or Educor, shall we say, who are the owners of Damlin City Varsity, as well as Intech, have decided that they will cut around 752 jobs as well. At the same time, you then have the Food and Allied Workers saying that they're going to fight SAB's retrenchment of around 500 workers because it is in breach of contract. We're still getting, unfortunately, a dire picture when it comes to the jobs numbers in South Africa.
Yeah, look, I mean, the problem is that at a 1% growth rate or under 1% growth rate, you expect productivity to increase by more than that on any given year, or at least about as much. And so what you don't need to find, even though the economy is growing by 1%, you don't need to find many more new jobs being created in that scenario, because productivity basically can account for much of that GDP increase. And at the moment, we are seeing a very weak economy feeding through to things like, for instance, Educor, as you said. Apparently, their year-on-year student numbers have dropped almost 20%. It could be the fact that, we are seeing maybe nurse office and some of the public sector institutions, taking up a bit more of the slack, and so people are wanting to go to some of these institutions that maybe are out of reach in the past or maybe more attractive right now. But it's obviously the weak economy that's really pushing through on this year. The fact that people aren't willing to spend money even on investing in their own education is, I think, a big negative in terms of the prospects for the South African economy at the moment.
Always great chatting to you. Thank you so much for the time. Really appreciate it. A flat stance thus far for the Johannesburg all share, around 0.2% loss then when it comes to the market as well. Apologies for that. Now we will take a break for now, of course, but we'll continue